Good morning, everybody. Welcome to the Breakfast Club. My name is Darren Hancock, and here we are on Thursday, the 12th of September, 2024. Oh boy, does that ever look like a mess, hey? I was making a bunch of notes yesterday. I was doing a bunch of journal entries and stuff and made some notes. Let me get these all off of here because it's all noise. I'll have to delete all that stuff, but let's look at the daily. So we've got this last little fair value gap right here. So you're writing down levels like 372, 264, 115. I think we have another little pop up and look at engaging the bottom of this candle here, which is that 372 on the upside. So I'm looking for opportunities for a reversal. If we end up digging into the midpoint of that wick and then the open, mean thresholds a line in the sand for us to keep going higher for the liquidity that's sitting just above the market here. There's multiple orders in here. So those are the levels I'm looking for retracement back into this order block here. We may just go sideways for a little bit inside this fair value gap, so we'll see how that works. We're just going to keep this in mind today, looking for a potential reversal. It is a Thursday. Thursday typically has a reversal day on it, so we've had 3 up days. We've made a high of the week so far. So if we peak out at that close of the fair value gap, I'm looking for a reversal there at 10 o'clock-ish. Somewhere in here to pull back into this range and see if we can start digging back into this candle yesterday. So I'm looking for an opportunity today to see if there's a reverse. If we come down to this candle's high, and freeze on that, and I see a reversal to go long, then I'll think we're starting digging back up into the higher points today. If we just get a small reverse to here, look for a continuation to the upside. Our 3-day look back is all below us. So if Wednesday, Thursday is usually the high of the week, I'm looking for this to peak out here. Let's see what we get. Let's go to hourly. We've got relative equal lows below us. Just gonna write these numbers down again. Looking for a run back into this area here to go higher. These equal highs above us. I don't want to see all this fill in. I need these to stay open, at least at the halfway consequent encroachment of this. If we come 50% back into that range, I want to see the rest of this stay open. Let's go over into natural gas. We didn't hit the objective. That's good. That's good, because that just tells us what? That we have strength. We just opened and gapped up above us. We're back into that daily price imbalance. I don't want to see it climb up on top of here now. Otherwise, we're still inside this little range. So I want to see it get on top of that and start going higher. Natural gas finally cleared the highs out yesterday, and now we're pulling back. I want to see this just turn into a wick today and keep climbing higher. Otherwise, we just got another return back into this range. You'll see us bouncing sideways. Bitcoin, and that came back to a perfect level there. Take out an old high, return back to it, equal highs, inside these small ranges repeating, off from trade entry. Body's totally respecting that. Keep going higher. Let's get on the hourly. Just get out of these here. So this was the level I was looking for. We've come down, hit it perfectly here. You're looking to go higher. You got relative equal highs above you. And an upside objective. So I want to see this hold now and see Bitcoin go up into 61.5. All the time this holds and this holds. I'm looking for higher prices. The box up here. Well, we got a nice reaction yesterday off the consequent encroachment. Climbing up when we get through here, through that mean threshold. Should be on the mean threshold now. That's got a hold price and come lower if you want to go lower, and it's got to get above it on a close today, so that Friday we can get more acceleration. If not, this rolls over here and starts digging back into this fair value gap here. We wanted that to stay open, and look at that, it came right down, tapped it, and we want it to stay open, and so far it's given us our two open days. So I like that for a breakaway gap to go higher. So for weeks, just come back to this old high right here. I want to see that continue going higher from here. this out of the way now. So far we're working on this, we worked on this Monday and Tuesday. Monday, Tuesday, Wednesday. Today we're just coming back, tapping the order block, and looking for a further run up into this fair value gap. Looking over here. It's kind of like my upside objective right there for sugar. So far we've got perfect response. Called sugar like so sweet. And we've had coffee and sugar. We just need to have milk. If we have milk, man, we would have had a perfect coffee here. We've got sugar, we got coffee. We need dairy now to make the perfect one. Anyway, so we had our reaction off of that high, our reversal. We got the reversal. We called this high, and what we're looking for right on this candle here. We wanted that to create that fair value gap. It did. We traded into it. When I always said we got to get below this, we did. Came back up. Sorry, but to get below this candle as well, we did. We closed below it, or opened right at it right here, and then traded back up into the fair value gap. Ran down to our objective, consequent encroachment. Then we wanted to see it come back up into here. It came back into there. Wednesday came back to retested the order block, and we continue pushing higher. Now I want to see this close through here and start running these highs out now. You want to get on, it's got to close above these highs here. You might get Friday, tap it one more time to get a for the highs. Okay, so right off that 25%, I like it, which is also right inside that little fair value gap you'll see right there. We're reacting off of it. Now you're going to see this start really climbing here and get back into this range. Otherwise, we're inside this small little range right here if you stretch that out. So you want to see it get above here and back into this range and clear this out. Because there is a small imbalance in there on this side. If you stretch it right out, you'll see it right there. See that little fair value gap? Not imbalance. This is the imbalance here. So you think about the run back up into that range and where you'd like to see support. Look at that rock wall and draw out your steps where you want it to climb up on top of, and that's how you build your steps. So you literally can see it by building the steps here out and see if they react off of those specific levels. So there's your rock wall. Pick out your footholds and draw them over here, and that's what you want to see the candles climb up on top of. Well, look at gold. This is great. Reached up into our objective here. Slammed all the way back down into relative equal lows. Took out those relative equal highs. You want to see it get some support off of here, which it has come all the way back into this candle and the old overlapping weekly fair value gap, or yeah, weekly fair value gaps. 9, 10, yep, and then start to climb higher. So now we're looking for, I guess we've got new price, new highs now. Yeah, we've taken out all these old highs. Oh no, the new, yeah, we took out the new high. So dig down into the 1 minute, see if there's a reversal. It is right here. You need to see that get support off of that if you want to go higher. We're coming back into this range. Look for a retest of this. Pull your fib tool, look at the 50%. If we can get back up into here for a short, back inside this range. Otherwise, if this holds price right here, you want to see it trade through this fair value gap to the upside and keep climbing higher. If you retrace back up into maximum there, so looking for a small range in here. So you came back up, tapped it. Now you want to see this keep pushing down lower inside this range. You want to come back into this area of interest right here. Pull your fib tool in there, 50%. If you're in here, pay yourself at 50%, drop this break even, and then work that inside of that range. This is my advice on that one, for what it's worth, which is free. So it's a self-assigned value. All right, let's see where we're at with, oh, that's this one. Let's go to oil. Very nice. Downside objective. That was beautiful. If you study the range here, where this freezes up is just magical. And I'm sure Michael's going to talk about it one day. I have not. I keep saying to myself that I haven't discovered something new with his principles. But I'm sure he'll discuss it. But you're hearing about it here first. Equal highs. Now let's see if this holds price. And we get a retracement back inside here. I want to see it climb up on top of this high here. Find some support on that. Start pushing for the relative equal highs above us. For oil, let's have a look at the hourly chart and see where we'll be aiming for. Start with the daily, sorry. That's buy side. Look at this rejection block here. Look at half the wick. And then the high. So we could see this here still. I want to see that stay open. Let's start pushing higher now. We hit our upside objective. just trading a stock. You got your upside objective. Quite lovely. All right, now how we act inside this little box here. It'll tell us whether or not we'll run back down into here. Or not. So we'll see if the range will extend out of here and go higher. $722. Somebody thought that Michael's on early. Oh wait, no, that's Darren. He must have lots to say. That's funny. All right, let's go over here. We're still looking for I'll put the slather stuff back on here. I'm going to delete a lot of my notes. Clears it up a little bit. All right, so we've got 5 minutes left. We're going to levels. Let's wait for all this to clear up. "15-second chart is on a bit of a move. Turn to order block above here. You want to see that keep climbing. Gonna get through here. We got relative equal lows below us, relative equal highs above us. So wait for one to get taken. My question is whether or not we take the high, then go low, or go low and then continue pushing higher for the day. Where are we going to get drawn in on that first half hour? Are we going to get drawn in for going longer and then slam back against us, which is ideally what I'd like to see? And if at 9:30 we start to draw lower and they think that this is now a retracement and then slam it back against us and take this higher, we could have more upside. But we got highs and lows, and we're in the middle of it all right now, so just watch. High taken. Nothing down here. Equal lows. Feel the gap. Trade below it. Literally opened below, came back up inside it. You want to see it get through here. Let's see. Let's say good morning to some people here. Get in here quick before Michael gets started. I got lows taken. Say good morning to some people here. Well, that's a bit of a delay. Turn my microphone off. We have a wow, it's almost like a full minute of delay behind us. So good morning, Hadid, Russell, Curry Fish. The regulars are here. I like they see that. It's great. Curry Fish, Craig. Abs, good morning, buddy. Mr. Pips, good morning. Craig, go crude oil. You're a crude oil kind of guy, are you? We revisit this fair value gap above us here. This order block. Drive lower. See, this is the concern if they draw us in low and then slam us back and take us higher the day. We've cleaned out all this sell side liquidity here. Unless that was the high, which I don't think it was because there's still a little chunk left over. Mind you, keeps popping into my head that Michael says we don't get a full fill of the range. The last little portions left open. I'm gonna wait for the 9:30. See what we get. Good morning, Derek. Morning, old faithful. Rather boring 1 hour chart, isn't it? Yes, it is. I gotta get some. I'm gonna feel some love here. I don't know. We've got this. Unless this turns into a Cam 3 model that we're doing right here. I like to see that run right back up in here and start to dig into here, get above here, use this as an acceleration to go higher. And you want to see a bold candle get through that. Joe Mack, good morning. Pendulum Trading, hello, somebody new. Welcome, welcome. Hans, good morning. Very small open range. Not yet. Oh, yeah, open ranges in like regular trading hours gap, you mean? That was it, yeah. Nope. Where was our 9:30? Oh, it's right here. It's very small. Okay. So this is what I want to see. I like to see that could not keep going higher. We'll see how this builds out here. Get some support right off that and start climbing higher. Give it a kiss. Leave it open, go higher. Or not. Come back, fill it in. Yeah, okay. So we've got a swing to go higher, and now we're eating through it. We have a swing to go lower. We're right up inside the premium rate of the larger range. So the next one would be if this doesn't hold, let's see how that fair value gap fares. I still want to see this go higher. You're stuck between two in a small little, you got one candle for an up, this candle for a down. This one's been validated, and so is this. Nope, this one hasn't been validated yet. So fair value gap fill to here, slightly higher incentive. And you got to close above these closes of these candles. We got to get above those for a continuation. Morning, Shepherd. Campione. Good morning. Is ICT live yet? Let me have a look. I'm on his 19th video. Yeah, he's live. He's live, you guys. That's the guy to talk to. That's the guy to listen to. Finally getting above here. I like to see that. Let's get above this wicks. So we traded above that candle, came back, tap it. I want to see that just exit now, go further north. Reverse, taking out a high here. We get through that little guy right there on the close. Then we got further downside. We're breaking back into this candle's open. It's going to stay above here. We close below here. Watch for a dig into this mean threshold of this candle here. We're closed below that, so watch here. Now you're really stuck inside this fair value gap. We have to close above it to continue going higher. This reversal here, you want to see get below that low and dig into here. That's the swing point. There's the reversal, but you got to get below that swing. Otherwise, this would be like a bear trap. How you would look for a trap people in thinking that we're going to use that little method of always a busy and trade back to it and keep going through. Watch how it closes here, above here. Remember, our upside objective this morning is to go higher and then run down lower. Well, that's what I want to see anyway. Let's see how we're closing right on it. So we're inside here and here, this small little range. Rejection block hit. I want to see it start powering through here. We've had multiple attempts to get down inside this candle. It's being held right at this candle's open. Now, let's see if this holds as a mean threshold. Because this old high here was taken out by this cluster here. So we have a high, a low, and a higher high. So this breaker takes out this high. We trade back into the breaker multiple times, trying to get through it. If we dig down into this most sensitive candle here, you don't want to see it get past that opening. Let's see it push higher. If it does, then the mean threshold gives way, then we're running back down into here. And I don't really see anything back here of value other than the consolidation. Cam 1 model entry right here. Is that Cam 1? Right on it, right there. Cam 1, continue to the upside. You want to see that stay open, go higher. I'm looking at 15-second. I don't see anything crazy fun there, Hadid, but yes, there is a we got this candle here. Look at that one once you trade above it. Right there, you come back, you tap it, keep going for the old highs. Then you've got a reverse. We didn't take out an old low, so this is just a fair value gap. Reclaim the bullish. Go higher. Reverse. Take out the high, come back, tap it. So I wouldn't say it's a nice reversal, but it's a this is, yeah, no, I wouldn't say that's a great reversal. You're in a consolidation, just going fair value gaps overlapping each other constantly, and you've got regular highs here and lows here. So I wouldn't get too excited about it yet, and we're still in the 10 o'clock, 9:30 to 10 o'clock range. So see, we're just back and forth here right now. What have we got here in the news today? 101 that we have 30-year bond auction. That's at 1 p.m. this afternoon. This isn't even worth playing in. It's just super, even a 15-second chart looks like crap to me. So we'll wait for something to set itself up. Who's got romantic music? Who can play some elevator music while we're waiting? Morning, Lauriston. $9.35. Let's look at this 15-second chart for which Hadi is talking. 9:35. This one right here. Yeah, just remember, it's not a reversal. It didn't take out an old low. All I did was just come back to an optimum trade entry continuation to take out the high. And then you trade all the way back inside it here. Wick below it. Bodies are still respecting it here. You come back inside it again. See how it's compressing here? That's just compress, compress, compress. It's going to blow out either higher or lower. So you got to wait. It's if you grab some off that high there, and that was 46 to 81, you know, that's still 35 handles. Good for you. If you took 35 handles out of that Hadi, just move to the sidelines, do a little moonwalk. Be proud of that action. Strut through the room for a bit. Say I just nailed a 35 handle trade in a sloppy price action. But at least you're looking, as long as you're trading your plan and you're executing above an old high, pay yourself at all. Because if you're holding that right now, you're going back underwater. See how it's traded through you already? So if you didn't pay yourself and have the discipline to pay yourself above an old high, move your stop loss to break even, then you just got worked. It's a tight little range. It's 15 seconds, super sniper range, right? Yeah. See if we start giving way. Mean threshold starting to give way already. They're not leaving that untouched. Let's watch to see if where we close on this in 2 seconds. We're below it. We come back up into this fair value gap now, touch it and go lower. Oh, excuse me. Dave Barry, good morning. I'm on with ICT. Just wanted to say hi. Excellent. Thank you for popping in, Dave. Yeah, sit on your hands, Adi. Don't forget, we're getting near the end of the week. You've had some awesome hits. Be very picky about your entries now. When market gets choppy like this, you're on a Thursday, you're coming to the end of the week, you've had a nice little run. You don't want to be giving back all your profits now, so start cutting your leverage. Just my advice. Start cutting your leverage back and waiting for that perfect entry. Like, don't settle for anything other than what you want. All right, so we've got the close below the mean threshold, return back to the fair value, take out the low. That's what we're looking for. That's what we were calling before it happened, what we're expecting to see. Now, if we're going to retap this, I don't see anything of any, like you're looking for these lows to get taken now. I would say somewhere in the vicinity of maybe here. Take out these lows. I'll see how it acts off of that level. And you see this ID, and I'm going to show you this on the 15-second chart because I like this. If you're looking for the highest high, this reversal, so I'll look for the highest high, that reversal there. We'll draw that out. See how many times we line up inside it. We find some support at that, drop below it, tap it, keep going lower. So look for this one here. And if I draw this one out from the bottom of that there, look what we come back to. So you take the highest one out of, if you're in this consolidation, the highest return fair value gap with the breaker that supports the run above the high, and then draw that out, and you'll see that nice little hit off of here, back inside a fair value gap. Leave a little portion open to keep going lower. I like that. And we're back up near the middle of this wick. We don't quite hit the middle of the wick, but I like the way it overlaps with this highest fair value gap reverse. And you want to see it get below here to validate it. It's got to get below this one, or it's got to get below this one for a continuation on the downside. So we wait. Finally, it breaks down below this one and this one with this candle. Then we trade back up inside this one and this one here. Whether you use the wick, fair value gap, or this one here, up to you. And if you're listening to Michael right now, I'd be interested to know what he's saying about that. If he's on a 15-second chart. I don't know what he's on. Let me have a look. It's just showing, I just jumped on there. It's showing a bunch of ads. So I'll wait for that. If he's talking about this wick or this, and you've got this candle here, take it to the upside, you don't get to come back to it. So look for this reversal here. Body trades above it, you come back inside it. Now you want to see this candle get taken to the upside, get back into this range again. Come back, tap it, start pushing higher. We're through that weekly fair value gap or weekly new week opening gap. Is that what that is? Push higher. My gray ones are weekly. Start pushing higher, get through here now, and start running for these equal highs. That's the 15-second chart reversal right now. Lows taken. We have order block. You don't get a chance to get to. So you have fair value gap and order block that initiates the run below this low. You trade above it right here, trade back to it right here, going long. The senior array inside this larger range from that high to that low is this. We got to work through this now, get on top of it and start climbing for these old highs. And we have 5 more minutes. And what a wonderful thing to do, to take out these highs on 10 o'clock and start really pushing into that, what do we have, 372? $372, 348. I want to do this one. $372. Here. It's going to get above here for me to start looking at this as the next price leg out. If we can get above that level, we're going any lower. We're going to get above here to go higher, and I'll look at that as the next price leg out. If not, and it just went below it, see how we trade above this high, reverse, trade back up into it, inside this range now. Downside raise, I want to see this from here to here, and then from 50%, 62%, optimum trade entry reversal, continue pushing higher, which is inside this fair value gap here. So we're just bouncing off that premium array right in the fair value gap. Now you might be saying, why didn't you take here or why didn't you take there? Well, look at that. That pretty much lines up with that fair value gap there and there. Consequent encroachment. Hit, react. And a lot of times you'll see this inside those ranges where it goes up into the senior array, the premium one, and then or the premium array, not senior array, premium array, and then reverses and comes back down into a discount array inside a small range. And if we take out that smaller range, the discount array now is down here. Or the next one below that is here. So we'll see how we act inside this one now. See how we're compressing again? We expanded, consolidation, came back up inside. If you're looking from this range here to here, cam model 1, 2. I'm just curious to see what if that's 50% of the range for cam 2 model. Have to take to there. Yeah, right there is 50%. That's a cam 2 model for a reverse back into here. Back to the discount array. Pay yourself. 10 o'clock now. Let's get it up there. Let's start busting through this guy. Compress. Now we're bouncing off premium and discount arrays. Premium, discount. I like the fact that we're not getting too much lower into here. Just ran that high out. There's a small one here. To trade back to there. Look for lower. You're inside this one, here and here. Talk about compression. You're waiting for it to explode out of here now. Not interested in a buy at 949 candle. At 949. This one. And not in this range here. Panel trading, I wouldn't touch it right now. It's a nice idea. It's you know, you're talking about 949 this one. I know you'd be looking at this one here, this order block. If you can get a support off of here, it's too tight a range for me, even in a 15-second chart. So wait for it to break out, wait for some support. I'm looking at my upside levels on the daily. We're looking for those we're looking for this fair value gap to fill on the upside. So that's your 376. We've already passed the 3.5 or the midpoint of this consequent encroachment. So we're looking for the fill of that now. And right now it's way too consolidated too, unless you're looking for a quick snipe. I don't know what kind of trading style you have, but that's sloppy. That's nothing I'd even want to think to participate in, even a 15-second chart. Yeah, it's not clean enough for me. oh, this inversion here, you think you've jumped the gun. Well, you've got some support off of it. You wait for this candle here. If we do not trade above this candle, you want to see this candle trade back into here. It doesn't. That gives you some strength. You start running above it, go, great. Now if I get back into this candle, I'll take that for a long. So you've traded all the way back inside it here. Fair value gap, discount array on the 15-second chart. So you're back into the discount portion. So even in that range, you'd say, I want a discount. So take your fib tool from here to here and look at how much you're into the discount. So as long as you're buying this candle below that 50% of the range, which is a great little entry, then you start going long. Now you're gunning for these highs. That's not a bad play. Campione. And you want to get through this level right here on a close. Otherwise, pay yourself a portion at that point inside that range. That's the senior or the premium array. Now you want to get some support off of this guy here and start pushing higher. Because if it reverses on you, comes all the way back down into that range, you're just in a sloppy price action here. So if you did get in here, I would have paid myself right at that senior. I keep calling it senior premium array up here. That's just that's a 1 minute chart. And it's like, look at how crappy that is. It's a good play off there. I like the logic behind it, but make sure you're super sniping in the messy environments like this. Looks a little cleaner in here, hey? And then it starts just getting choppy, all inside that premium array that we're talking about. See that? I see how we're not getting through it. So that we got lots of liquidity building up here now. If we just keep running out those people who want to go higher, you run it up, come back down, clean them out, start giving the impression you're pushing higher, come back, take them out some more. So we're going to keep an eye on. You're stuck between these two levels now. One of them's got to give way for this range to extend. The 1 minute fair value gap. Sorry, handle trading. I missed your question again. Russell, nice entry. How you time that real money trade? Well, whether you're trading demo or you're a prop firm or real money or whatever, that's all the psychology. It doesn't change whether this is demo account or real money account. Nothing changes. The rest is in here. So imagine this is a real account or not. It doesn't matter. It doesn't change the algorithm doesn't change just because you're on a demo account versus a live account. If the broker's delivering you true price action and they're not manipulating at a broker level, then the answer to your trade question on where you put this live is up here. That's all that is. Fair value inversion on the 1 minute, 50% retracement, target swing high. See how this is just sloppy price action? You guys don't want to be participating in this. Wait for something clean to set up. Otherwise, you just get one of those. All you're doing is feeding that desire to be hitting the button all the time. This is a great little lesson on just staying out of the market and watching it. And wait for a cleaner setup. We're on a 15-second chart. Look how crappy that looks. That's super sloppy. You don't want to be in that. And if you do, it doesn't make you an awesome trader. It doesn't make you great. It just makes you stressed out. Wait for something clean. That's just my opinion. If you want to be in it, go for it. Fill your boots. I don't see anything fun in that one right now. Only trading 1 micro while learning. closed once high was hit. Good for you, Campione. Now just sit on your hands and wait for something good. Just sit on your hands. Now, ask yourself, where do you want to see price move to? See, premium, discount, we've gone from premium to discount to premium to just under discount, premium, discount. Equal lows now, and we have a discount portion that we still haven't filled yet. The premium portion's been worked. Lower half's been worked. Top half of the discount array has been worked. So we're literally stuck between those two. And you got equal highs above you. And we have another discount array down here. Talk about being stuck on price action. Is this like the opening day, open high of the day? Or was that yesterday's high? Let me just check my chart here. $293. No. We're just hanging around on yesterday's close right now. Yesterday's close was 247. 248. And we're sitting right now on 247, 248. This is the close. Let me put this here. That's yesterday's close. Do you guys want to participate in this? Let's look at a 5-second chart. Say 5 seconds is even. We'll do a 5-second chart here. Here's a 5-second chart. After 10 o'clock. Nothing significant other than just a retracement back into this range here. You're into the premium level already, so you wait. No highs taken. You're above. You're way below. Nothing significant here. See, this is just all crappy price action here. Highs finally taken. Reverse. Here. Trade below here. You look for this candle. These two candles to get taken on the downside. They do right there. You trade back into them here. You're running back into this range. Looking for this discount array here. You hit that. Wait for a reversal. Low taken. Nothing, nothing, nothing. We got one here. No, you don't even get inside that. All these little highs taken. Optimum trade entry reversal. Trade back up inside this here. For short, take out these lows. If you're looking at this, you say, oh, it took out the low. I'm waiting for that to trade above it. It doesn't. So you wait for it to trade above this now that you've taken out that low. And it does right there. You don't get a chance to get back in it. There's an imbalance right here. You trade above it, come back into the imbalance right there. Catch that for a long. looking for highs inside that range. Look for this premium level again, and you trade right into that premium level right there. You trade through it, come back into it. Now you're looking for it to go higher, and it's going much higher. So you look for support inside this level, and you do. You catch it, take out that high. We get a trade below here and a close below that. This is that bear trap. See how we've got this order block? You've got to trade a body below that order block. See, it was just a wick. Body did not close below it. It did close a body below here. So you think, oh, as soon as it comes back in here, I want to go long or short on this because I've just taken out this high, right? So if you catch this and you realize, ooh, that's just traded above it. I'm on the wrong side of this. Closes below, gives you an opportunity to close out your trade and get on the right side of it once you close above it again. So you close above, comes back, gives you one more opportunity to get in right there, and then off she goes. Anyway, let's get to 15 seconds. I'll go back to 1 minute here. Now, how many of you are like, I should have caught this. I should have been in this. No, you shouldn't. No, you should not. This is, look at this. This is the reversal. This is where Campione was in earlier and just caught a little high above here, got out. If it comes back into you again, into that candle, the reversal still intact. That lower discount array still supported price. We just came down, hit that, the bottom, equal bottoms here now. You run back up, and you'd have to look at higher or lower time frames to see if there's a reversal, which we saw on the 5-second chart. But now you're going to push yourself to a 5-second chart to look for an entry. 1 minute, sloppy, wait. Now you're like, oh, well, I should be on this. No, you shouldn't. You shouldn't. Just wait. Otherwise, you're saying to yourself, I've got to dig in here. I have to be in the market. If you've got this, I need to be in this. After seeing all that, and so yeah, there was an entry there. Super sloppy. You had to weather all of that to get your highs. And given it's a 72 handle run from here to here, you got to weather all that. If you've got intestinal fortitude and you've got the stamina to endure that, and you don't have any psychological fears, and you just say, no, my stop loss is going to sit here. I'm just going to run for that high here. I want a discount to run for that high, and I don't want to lose that. If I lose that, I'm closing out my stop loss before I lose that. That's fine. All the time it's staying above it, you're happy. But all the time we're working back and forth, you got to get out of this range to see it extend, and you finally see it break through here. One opportunity to get on for continuation. And I'm looking for 372. Is that a different oh, it's right there. How many of you are just sitting there saying, I need the fix? I need the fix, man. I need to be in this. How many of you took something there? See how we return back to this old high? Body trades above it, tap it, come back one more time and tap it perfectly. Right there. And there. Hits it perfectly. Now looking for higher prices. 37250. Never shall be done. You 370.50. Sorry, 370.50. London high taken, yeah. Yeah, look for that daily fair value gap to fill. And that's the fill right there. You'll see it right here. I guess I should move that out a little bit. That makes it a little easier. Here I am trying to find the line, and it's right there. So let's see how we act inside that one. And then 410. So I'll put this here. So I'm looking here and here. What level is this? That's 410. Anybody tell me what 410 is? Look at your charts. What will be your next upside objective? You want to see reach or not reach for? What is 391 and 410? Consequent encroachment of the hourly fair value gap. I wonder if that lines up. It's not the one I'm looking at, but oh, lookity, lookity. Yes. That's not where I was looking, but I like what you're looking at there, Hans. 50% is right here. What's this one? Consequent encroachment of that would be right here. That would be right there. That would be 50% of your hourly. And mine are sitting here and here. What are these two I'm looking at? That one and that one. I like the way we've got an overlap sitting in the middle of those two though. So I'll be looking for that if these two don't hold. But that's not the one I'm looking at. Higher time frame. It's a couple of more higher time frames above that. Is that what 410 level is? Concentration? No, that's not what I'm looking at there, Russell. The 410 is not the consequent encroachment. The consequent encroachment is actually higher or somewhere in the middle of those two on the hourly. It's not that those two levels. Consequent encroachment of daily of the daily. Daily what? Consequent encroachment of daily is less than that. I must not be looking at the same thing. Think about wicks. Think about wicks. Stuart McAllister, yes indeed. The wick. The daily wick. The low of the daily wick on Friday, August 30th. That's the wick. So if we trade up through this fair value gap, you're looking in the wick, and to see if that wick, if we start getting above 50% of that wick, that's 50% of the wick right there. This is 25% of the wick. So I'd like to see it hit some resistance in here, roll over and come back down. If we come right up to this, I want to know, do we trade through it on a body and start going higher when there's draws on liquidity above us, which is these new week opening gaps above us? So that would be the draw if we lose these two levels here. No, that's what Michael's teaching more of now, right? It was wicks and how to identify them. And where's an area you like to see support or resistance on. If you actually take that daily chart right here, that wick, and you look at 50% of the wick, which is right here, or you take this whole, and I like to use the bodies. Back in the day, he used to teach us the bodies. That's just above 50% of that wick of that breaker. I think that takes out that low, does it not? No, it doesn't. So this is like a mitigation block. We have nothing. These go. It's an attempt to get down there and it fails, and we come back up. If we can get through this, that'll be like mitigation to go higher. So back inside this mean threshold would be right, pretty much right on my watch here kind of candle. So I've got lots of little overlapping arrays that I'm interested in inside this cluster. These two up close candles. That one, the wick, they all play important role for me. So I'm kind of looking inside that level for a reversal. And if I don't get that, then I'm looking for these equal highs above us. That's how I'm kind of, I look for my validation of that, if that makes any sense to you guys. Wow, I like that dead center of my screen. Get that slop back in the 15-second chart. You look at the price action we had yesterday compared to this price action. You want to be in this? Will it make you feel better? Will it make you feel really macho if you haul a trade out of that and you high five yourself and you give yourself positive reinforcement on getting inside sloppy price action? This is a psychology builder day. This is why these people keep trying to recruit me. This is your psychology day. Journal this. Journal what you're feeling right now when you're in this kind of sloppy price action. You feel the urge to pull the trigger, like you just got to get in and you got to get the fix. Are you asking yourself, oh, I could be in on this? Are you in a beat down mode on beating yourself up because you missed this run off of this inversion here? Said I should have caught that, shoulda, coulda, woulda mentality. Or you say, no, it wasn't clean enough for me. So I think Michael's trying to give Caleb some advice the other day on one of his videos. He was saying, I'd be more proud of you if you looked at something and said, I'm not sure about that. It doesn't feel right for me, and not take it, and then take it and win on that trade. So we were saying, I'm not sure. Yeah, you could squeeze something out of it, but it's not clean. I'd rather not take it. And it takes off. Now do you beat yourself up and you say, I should have? Because it's like saying that gut instinct that I had that said, yeah, it doesn't feel right for me. You're going against that. And one day that gut instinct's going to say, nope. And you've taught yourself to just ignore it. Believe me, you're going to need that one day. And it may not be anything to do with trading. How you reinforce that behavior is important. I'm just talking now because I'm just filling time, filling space. We're watching to see this, the last of this daily fair value gap fill in here. And then we want to see a reversal. Stand by. A high five is a high five. Too late to enter. Best as at the bottom of the reversal. Yeah, this was the optimum place to enter. But after all this slop that we're looking at in the 15-second chart, wait, and then see if you see this displacement candle. You know, it breaks out of this consolidation. You want to see a return to consolidation, or we have another consolidation above us. So you have two overlapping consolidations. Highs. If you take out the highs right here, you want to see it come back into those. It does. And you want to see this stay open as a breakaway. That breakaway gap, you want to see that stay open. Tap it. Create it. This one here just comes back to the open and close, and just comes back and taps that old high right there and leaves. I don't know what this one was that I had on here, but I venture to guess that if I squeeze that out of here, I wonder if I move that over. No, I don't even know what that one was. And I'm not going to go digging back there to find out. So anyway, we got the play off of that high. No, we didn't get the play, but you see the old high return continuation, looking for the rest of the fair value up to fill. And a little tiny reversal here. And look at this. This is pounding down, beat you up. Now I bet you're happy you didn't play in this little market. And we didn't quite get a fill there. You see that? Right back to the opening. Now you feel better that you didn't get involved in that mess. It's not just came back and cleaned you right out. And if you're long there, you're underwater now. And you're gonna they're not giving you an opportunity to get out of that. And they're not giving you the perfect fill. That's ironic. You'd have to have a stop loss sitting down here, or this original one down here. Yeah, it's a beat down. Come all the way back down into this fair value gap, discount array, optimum trade entry reversal. Who knows? Is it clean? Hell no. Patience. How many people are playing in this market? You don't want to be playing in this, man. It's observation time. Let's just watch it. Even a savvy investor, I'd be surprised if Michael's saying, this is your entry right here. Or is he just going, this is just too sloppy. Stay out of this. I'll be interested in, I don't even know what video number this is that he's on. What video number is he on? Oh, it just says September 12th, that's all. It doesn't say lecture number, whatever. So optimum trade entry reversal. %, optimum trade entry reversal. So watch this candle here. We got to get through here again now. We're just coming back up into this mean threshold of this candle. See that? Watch the wick. Sorry, the consequent encroachment of the wick. It's the mean threshold. Consequent encroachment of the wick. You want to see that give way and start working through this candle here and get back up into the middle of this fair value gap. So the consequent encroachment of that is probably somewhere around here to here. Right there as well. If you're just shy of it, it's a lot more sell side strength if you don't fill it, and that stays right there and you don't get that fill. And we just hammer through this. That'd be much heavier for me than filling it. I'll leave that on there for now until we either see this low get taken or we end up starting to come back through that 50% again. I want to see that 50% right there stay open. Right off the 50% of that wick right there and freeze it up and send her south. You don't even get CE of the wick of the SIBI, but you get it off of there. This is where Michael he does these really weird kind of trades now, where he's like, I'm absolutely sure it's not going above that now. And that's just going to tear down. And it didn't. So he's probably saying, now I'm expecting to go all the way up there. Darren doesn't know what he's talking about. Oh, well, I was wondering if that wick was going to give us some support, and we just slam it down. We just found support off of here. What do I know? I was just looking for that, thinking that would be cool if it. The bodies are still respecting it. So 50% of the wick, we just popped up into the consequent encroachment of that SIBI. We're back into this last down close candle on the swing high, low, higher high. That breaker right there that takes out these highs. Finding support off of here. So the battle begins. Let me see if the bodies hold on that mean threshold of that, or consequent encroachment of that wick. Still got interest in that wick. That wick. Coincides with the fill of that fair value gap there. See that? So I want to see if this pops through here and find support off of here to start running higher. You got to get through that array up here to extend that range. We get this out of the way. Five seconds. That's where Lauriston likes to hang out on this 5-second chart. He does some killer trades down here. If you come back into here, get above here, trade back inside this range. You're going long, so that would be your long off of there. Come back, give you an opportunity to get long off. So now you've taken that high out. Come back, get long again off of that one. Take that high out right there. So this was a really nice little, there's your there's your fair value gap. There's your overall high. So you trade all the way back into here, that consolidation. Look for these highs, your first high, runs it out. Then you go, great, got a reversal here. Trades below it, trades back inside it, runs to the discount, hits it, premium discount, hop back in on the premium, run back up, take out the high, run for the higher highs. That's where the extension of the range occurs, right All right, in here, above, back down, support it, and then finally take the highs out, reverse, come back inside this order block. Now you're back inside this one here, so you're really between there and there right now. You want to see that keep coming back through here and take there, perfect. Nope, not perfect. One more little notch down. There, bing, got it. Now you can go back up again. Or you can start taking out these equal lows below you. That's a 5-second chart. So it's literally doing, if you be catching, you got to be super savvy to catch those, man. Like, watch these reversals, catch it, tap it, like right there. We're looking for that, hit it and go higher, or it has to drive down lower. So great, drive back higher, take out these highs here, use this one, little guys, there's something in there. You'd be forcing something there. Equal highs. It's got to stay inside here to go higher. Off that guy there. See how small it's getting now? This is real good practice if you want to get down on the 5-second chart. It's compressing like crazy right now. It's got to bust out of here. I see how sloppy this is on a 5-second chart. There's some nice little ones if you're just looking for a quick run to an old high and reverse, give it another go, take out an old high, come back, give it another go. You want to see it take out an old high. That's your high right there now. And you, what's the high of that candle? 319, high in this candle. 3195, so it did take that high. So there to there, see how you literally are compressing now? There's a reversal right here. Comes back inside it. Go lower, take out these lows. I took out the lows. Look at this one over here. That's a 1-minute fair value gap. We're coming off of, you're inside this little 5-second one down here. You've got a little fair value gap down here. In fact, you've just taken these lows out now. Stretch it out a bit. Look at how sloppy that is. And that's a 5-second chart, you guys. Oh yeah, the 1-minute chart looks so much more delicious to play in. How do you like your cheese? Grated. Trade back up into that order block we were talking about. Mean threshold, consequent encroachment of that fair value gap. Bodies are holding it off this order block. Drive down. You want to take out these lows now and start digging down into a yonder discount array. And we'll see how we act off that initial opening fair value gap. This has to hold price, has to keep holding price. And you got to let this fair value gap fill to go higher. Otherwise, we're going to get a little retracement here. And it's 11. We're coming up for 11 o'clock now, right? Sloppy. I'm not participating in any of this today. Daryl. Who's Daryl? I just had a quick look at ICT stream. He is saying that this buy side price action is typical from New York AM session after a big rally day. Okay. Reminds me of what he taught us in the mentorship. Yeah, I don't remember a lot of those fine details about after a rally day, and like that's some finesse. That's finesse stuff there. All I know is this is shit to be in, and I'm not participating. I know what I like it. This is not not one I want to participate in. It's not clean. You're looking at a 1 minute chart and it's not that clean. You're certainly not going to get that on a 5 minute chart. 15-minute chart. Look at all the wicks going on in there. You want to play in that? Ladder. Me too, Hadi. Just watching. I see price going to 460. 460. 448. That's my upside next number. I got these three here and then 448. And 521. This is an open of the last first day bearish order block. It's got to work its way up there somewhere. It's got to fill in that fair value gap, or else we're just hanging out inside the middle of that fair value gap there on the 30th, 3rd, the daily BISI, or a SIBI, I should say. We're just going to hang out in here. This is the consequent encroachment of that. Of your daily SIBI. We're in the top portion of that. So if you're looking at from here, I'm going to draw this out here so you guys can see premium of the premium. We're in the lower time frame, 1 minute, right? So we talk about things being fractal. We are in the premium portion of the SIBI on the daily, and we are in the, so this is the premium portion, and we are in premium, discount premium of the premium level. So we're running between premium, discount of the premium level, premium, discount premium, discount premium, all bouncing off that equilibrium. You see that? And see how we're working it? Or if you're looking at the whole range, it's the 75%, 50 to 75, 75 to close. Whatever way you want to look at it. I like the premium, discount premium, because I understand that we're in the highest part of that range. And I'm looking for reversals. Once we hit that, I'm looking for a reversal to get back into the range or get out of it and look for an extension. So you see how we just keep working that whole premium portion, discount portion. And then there's the subcategories of those, which is this. So we have the premium, discount, and this whole section is the discount, premium, and now we have it even broken into that premium level is broken down into its premiums and discounts. So you see how we're getting right down to a 1 minute chart, bashing around in between these levels. There's the fill. Body. You'll see right in there is a small little reversal. Premium array. Right there. That candle's high is 348. This candle's low is 349. One handle. Back to the open. And now you're inside this. So you see how that one SIBI encompasses the premium array, and it is literally the premium discount range. So watch right here. See how we ran all the way back inside it to here. Now you've got to go, I got to get out of here, or I got to get out of here. So you're just working that whole inside of that fair value gap here. And this is another example of a premium array run all the way back to a discount. Well, if it's inside one fair value gap, split it up and you'll see that that's a premium all the way back to a discount. Go down to a 1 second chart or a 5 second chart. We'll look inside there and see if we can't see that little run we just had here. Right here is the trade below. Right, there's the reversal. Trade back into it right there, and boom, take out all the liquidity down below the market here. Fair value gap right here. Look where we look at how that hit it. Right there. Bang. Lovely. So you see the reversal on the 5 second, but that's just my point was in the 1 minute chart. You see that high there? Right off that little array. It's only one handle. Come all the way, and that ripped all the way back down inside that fair value gap. The reversal's there on a 5 second chart. Again, not like you would actually play that or not, but you know. I haven't had my tea or coffee this morning. My little ADHD brain loves coffee. Kind of calms me down a little bit. I get a feeling we're going to get some action this afternoon. After lunch, 11 o'clock. 10, we're going up for 1 more minute for lunch or for the 11 o'clock run. That's funny. I'd like to have seen that, taken that out and then traded all the way back down. Here we go. Look for these lows and down into this little discount rate. We're inside this range here. Look for ye to go lower. I want to see that low taken now. Thank you. Now give me some acceleration. We need to get through here. We need to accelerate through here, not just tap this. We come back and tap the fair value gap. That's fine. And just gun it. I want to see it get some legs here now. Wick. We have fill, leave that open, keep coming down. If we've taken that and that one closes, then we're coming back into this, we're inside this range now. And we have smaller little liquidity pools here. Oops. Don't close above it. So this is taken out here. Look for this candle to get closed below. Close below it right here. Tap it right there. Drive for these lows. Now you want to see if this stays open, and then you're back into this range again now. And look at that. It literally opened, closed on it, opened on it, and now we're going to go higher. Back inside this order block. Does this hold for a optimum trade entry reversal? Go lower. And yes, I do love my little fin tool there. There's 50, 62% puts us right in this order block here. We're just over the 50% equilibrium range. Back inside this. We have an area that we'd like to see some resistance on. So we traded through this candle and then back to 50% of that wick, which is also the top of the fair value gap here. Digging deeper into the range. %70 puts us right inside the fair value gap. And this guy here, we've got a body trading above here now. We're tapping it, looking for a higher run inside that range now. And we get the further run. There's optimal trade entry right inside this premium portion of that run. It's the objective we'd look for in here. You want to see this. It did not just tapped it and then keep digging into here. So now your ultimate entry is right there, 75%. Tippy tappy, a little bit of wiggle room up to 79%. Fill that. It'd be nice to have stayed open and then reversed. So if you do trade in, let's say you got in here at below 50%, as soon as it got to 50, go to break even. 62, go to 50, 70, go to 62, 75 right there, bring it up to 70, and if it hits 79, you move to 75. So you're sitting right here. Bang, there, now you move to here. Watch it. Just watch that right there. Now it just tapped you out. Should be done. So from here, your entry right there, 301 to 331. So there's 30 handles right there. You snatched almost all your whole 100% of your trade out right there. So you get 20 some odd handles in this. If it reverses and comes back down, you caught the optimum trade entry reversal on the reversal from this reversal here. So you're trading up to that premium rate at 82% or at 80 or 79%. Now you want to see that. Do we stop here and reverse, or do we close above that and extend the range and start looking higher again? Next level is mean threshold right here. If that gives way, that little tiny scribble I put in there, just show you that. See where it hit it? Now I want to see that pull away like it did here. I want to see that zip away. If it closes above it and above here and comes back and taps that, goes higher, I'm all right with that. But I want to see that stay open or stay support now. Drill back down into this guy here. I'm going to remove this one here for now. I'm inside this range now, or from here to here. This is the discount array, so I want to see it come back into here. Even if it's compressing, it's a logical place I'd like to see it come back to. So where does it fail for me if we close above that level? $18 seconds, mean threshold. There's the mean threshold. See how it hit it? Now we come back and tap on it. Now I'm expecting it to extend the range now. I wanted it to come back in here. Didn't get that. We stayed inside the fair value gap. SIBI. If we break above it, I wanted to see it, use it as support. Is exactly what it did. And now going higher. I wanted to see it get back down into that level. It didn't. Gave us the I'm going to keep going higher signal. And the mean threshold. Ideally, you want to see a body get above here now. Just wick around in here. If it doesn't hold, or this mean threshold holds, and we get below, I want to see it get below this low and use this candle here for support to go lower. And then we're back to thinking we're inside this range again still. So that's the line in the sand. Bodies are still respecting being below it. And now I'm looking to see how we act inside here. We get a wick through to the open of this candle. I'd like to see that just tap into the midpoint of that and go, but this order block you want to see continue to hold price now and push through here. We're giving multiple taps on this. We're drilling into this mean threshold of this candle like a drill. So as we break through that, then we're looking for those highs. If it holds, because it's the breaker, right, that takes out these lows, and we've drilled into it, drilled into the last most sensitive candle, and we're drilling into that mean threshold constantly. Now once that gets eaten up, we're expecting that high to get taken, and I want to see an explosive to the upside. When it lets go, just run. We're through it. Should start gunning it now. Come on, start pushing up. I want to see a big candle and then a return into here or here, depending on where we close on that one. Two, one, good. Come back, give us a little kiss here. That's the gunning I wanted to see back here on that candle, but I'll take it there. No worries. Leave dodge. Let's go. Let's move this over here. Acceleration. Yeehaw. Almost sounds like Michael, hey? I hope he's saying the same thing over there. What's he saying? I don't even know what he's saying. Oh, he's not live anymore. Or is he live? Yeah, he's still live. Oh, no, he's not. Is he live? No, he's not live. Nope, he's done already. Okay, good. So we got our acceleration. I want to see this stay open now. That creates a fair value gap there. And it just comes down and taps it and does not take that high. That would be even more explosion for me to go higher. Look for the return to the daily fair value gap. Sibby. Oh, yeah. Freeze it on there. That'd be nice. If it freezes on that, comes back, taps that, now leaves from here without touching that. Maybe it's going to come back and give it a kiss. I want to see that stay open. 366. Come on. Right there. There you go. Now we've got a high taken, fair value gap. 50% of that wick I was telling you about. We're right at that 50% of that wick. Now you want to see, give me some rush. Yes. Lovely, lovely. Look at that. The power of the wick, hey? That's something to look at. Was it, who was asking? Russell? I think it was Russell was asking. You didn't really look at those levels. Look at those wicks. Look at the halfway on those wicks on the way up as areas of sensitivity. So here's the reversal on an area that we were looking for a reversal. This candle takes that one out and that one out and this one out, and almost did it close below that. Anyway, that order block there is where you're looking for a continuation on the downside. I want to see this stay open. If we do get a return back into it, half, no more than half, leave that open and start running back down. So you're looking for your fib inside here for trading inside the range, internal range of liquidity. That's the order block there. We've come back inside it. We close below it right here. You tippy tappy it. You want to see it really start to accelerate down now. And you're just hitting off of this 50% of that range. Do you want to play in that, or do you want to wait for a nice discount? You'd expect to see it come back up into a 25%. A nice little discount inside here somewhere. Go shorter. But if you're really tight and you want to trust that, you want to go lower, as soon as that breaks 50%, give yourself a move to break even and take some off. And then again, you're in a tight range there, so do you want to play in that? That's too close to 50%. Give yourself a nice little premium to drop into a discount. The ideal entry would be right here. In other words, if you trade above it, you get an opportunity to get your trade off before it hits your stop loss. You got lower leverage here, but you got more room to play. If this now becomes a catalyst and we get through this on a close, then look for this next price leg higher, and it will take out all that I'm looking at here. And then we're looking for those quadruple highs on the daily up there. 1, 2, 3, 4, 5 highs up there. That big plateau of rock to climb to. So we're all inside this level right to here. And I want to see it get out of there right away. I don't want to see this waffling around in here. Again, it's been a shitty day, so I'm not too keen on trusting price action too much right now. We've traded above that little tiny level, below it, above it. Now we're finally supporting there again. Come back inside this range. That high there. You'd have to break that high there. for me to get back into here. Otherwise, I like this candle here for further continuation. If we lose it, then we're looking for this premium array up here. No coffee. My guess is Michael didn't take any trades today, even though, yes, we could find some semblance of setups in there. Definitely not a day to be playing in. And how disciplined were you to stay out of the markets in days like this? Or were you needed the fix, right? You needed to get in there and get the rush. It's fun though, if you think about it. We've still been staying on price action, despite how crappy the price has been. We've still been able to stay on the horse. That is a high five. If you can stay on the horse inside all this kind of crap, you're watching price action, you're saying, this is the level I want to see. If it holds it, great. If it doesn't, that's the fail point. And if you've got a trade on there, then how do you manage your trade according to that fail safe, right? And so far, so good. Look for this level down here. So that candle's still holding. Said I didn't want to see it break above that level right there. Taking out that low, 50%. Take a chunk off there, especially with all this chop. Take a chunk off, move your stop loss into break even, wherever you got in on that candle there. 62%, you would be right back at 50 and you would have been taken out there. So you would have taken off a portion there. And that little trade there would have netted you, let's say you caught it right at the low, 32. That's almost 30 handles just in 1 minute or 2 minutes. Trades back against you. You can trade into that one again. Not that you should. But I'm looking at that and going, look at that little level right there. If I find support off that now, stop would be here. And you're looking for another run to 50%. Move your stop loss to break even. Take a chunk off there. Wait for it to get to here. Right there. Move to 50% now. Take a piece off here. And we just hit the bottom of that discount array. So you get to double down on that entry. Not that you should, but I'm just saying we haven't come back to 60% yet, or 50%. So stop loss will be sitting here. You take a chunk off at 62%. Your stop is sitting here. And you've just done a rinse and repeat. You've done once, you come down, it came back up, give you another opportunity to do the same thing again, you come back down. So there's like 60 handles just in those two candles. So our stop loss is sitting right there. Imaginary, just playing, just trying to stay on price action, just playing in, not encouraging any trading, just look at. Do I see a cam model here? That would be a really sloppy cam. That candle there, you wouldn't want to lose that mean threshold or back into that little tiny fair value gap we had sitting right there. So now we'd be out of that trade. Oh no, did it tap it? 32125 and the high is 3205. So no, you'd still be in the trade. it dips into 70%, you'd move to 62. We're down into the discount array now, so start paying yourself more down here. As soon as you hit it and hit it and hit it, inside those ranges, off that little order block we talked about there, come to 70%, and then I'd move it to 62, just using this fib tool method. There. Move to 62. If it hits 70, now move to 70, 75. You quickly move it to 79, 78%. Right there. Mean threshold, pay yourself again. Came back, took you out. So that last trade, you got 30 out of that. Then from there to here, if you're paying yourself on the way down, you got a small little piece that got you all the way down to there. And if you've got mean threshold, which is just shy of the mean threshold there, came back. So you would have caught all of that down there using the fib tool, method. Now, if it reverses and goes all the way back up again, you'll be like, man, even on the wrong side of that, you caught that. But I'm just trying to show you the simple logic of what we saw there. An area expecting some support. Not that you would have traded that. I'm just saying it's kind of interesting. Bodies are still in here. We've already wicked through into the order block below us, which is the last sensitive part of this breaker. It takes out these highs. The last down close candle is the most sensitive. Its mean threshold is the line in the sand. And now we're getting a retracement out of this discount array. Oh, do I see a cam model on the 15-second chart? Let's have a look at the 15-second chart here. Monsieur Cam. Oh, look at that. Yeah, that looks a little cleaner, hey? Trade below it. Unless you want to incorporate this candle. If you're using this candle wick here as well, or if you're just using this, and how you draw your consolidations is up to you. I'd probably like to draw that one there. It's easy to say it now after the fact because you can see a nice displacement candle that takes out the lows. Then we trade back into a nice little Cam 2 model there. That's probably a Cam 2. Let me see. Watch this candle right here. If it hits 50%. There's 50% right there. That's a Cam 2, and it didn't quite hit it. So you would have had a Cam 1 all the way up into here. So you had a Cam 1. And if you did incorporate that wick down there, and you waited for price to trade below it right here, trade back up inside it. And to me, this seems like more like the consolidation, not that wick. But yeah, that's your cam model for continuation on the downside to breaker down here. Trade back up inside it. Trade back up inside the fair value gap. Leave a small portion open. Trade back down. Now we're breaking this upside. We've taken these lows out. We're inside this range. We're down. You got a small little piece down here on that. I'd move this guy here down into here. I'd be looking for that piece on the downside. If this doesn't hold, look for this on the downside. If you close below that, you're going for the lows. The fact that you're waking through it already and the body's freezing on it, don't like that because it's not a consequent encroachment. So I like this coming down lower now. Sorry, it's not the mean threshold of that candle. If there's a little candle down here and had a mean threshold, then I'd say, yeah, maybe you give that some wiggle room. But that is the down close candle with the fair value gap in it. We've already traded below it. Come back up inside it now. You want to see that start running these lows now. You don't need that anymore. It's an ugly day. I agree with you, Chris. I totally agree with you, buddy. It's shite. It's totally shite today. It's still fun watching price action, and it's still fun trying to journal what's going on inside here. What was I thinking at this point? Screen capture that. I looked at this. Did I start saying to myself, I should, I could have, would, all that negative shit you're not supposed to say to yourself? We took that low. We did not take that low. Keep watching here. If we get through here, I want to see that high get taken now. If this is gonna, this coming back into play, you got to see that high close. If it doesn't, look for here still. Really short scalps off the fair value gaps, good. If they work for you, then and you're really being diligent about how quickly you stay, and you're managing your stop loss really tight in these low levels, you got to be watching that stop loss. Oh my goodness. On a 15-second drop post, 11 a.m. trades are hard for me until after 1 p.m. I missed it. Yeah, don't worry about it. You didn't miss it. You just get to watch it. You get to enjoy it still. So we're back into this candle. It's like one of those ones where you say, here's the fair value gap. Did you get it? Nope. We'll look for this candle here then. If candle runs right through it and you don't get an opportunity on this candle to get back into it, and this candle's high gets taken right there on a body, you look for price to run back to it, it taps it, and then you go. That's how those reversals kind of work. If you don't catch this, it's a positive sign that it's really bullish. Like if you don't get a catch on the next run and it takes out the next objective, which is that little swing high, you want to see that high provide support now and just gun it. Get away there. It's not gunning it, but you know, it is getting away from there. So for this one here, this small little consolidated range, you want to see a body, big body get above this. Use this candle for support to go higher. Otherwise, we're inside this range here. There's a fair value gap above you there. So technically, I'd like to see this one get, not that one, but that one. Close above that, use that for support, push higher, take these out, and run back up into that range here. I like this being the high of the day. I like to see that just freeze up now and just continue coming down for the rest of the day. Back with me, you'll enjoy ICT's morning advice and his advice for this afternoon's PM session at 1:30. It'll be late for me. I won't even get to that video for another couple of weeks, I'm sure. But when he's calling price action, I'm trying to call it with him again, like trying to review what I was saying back in my videos. And I want to see if he's saying the same thing. And if he says something new, I go, ooh, I need to go back and review that. And I go back and I make tons of notes. This is just like a snippet of some of the notes. I capture all these pictures and I make lecture notes on them. And that's just like, and then I print them off. So I'm up to like 17 or 19. And then I put them in a folder, download them to my iPad. Then when I'm out and about, I got some spare time, go on your iPad, study those notes. The nice thing about this morning is that it was more about what to expect after a large range day and how to prepare, how he prepares for the afternoon session after a long range day the previous day. Ooh, interesting. Okay. So we can expect a day like today, after a long range day, you look for, expect to have some chop in the market. All right. That'll be definitely be a note. There's still some opportunities, despite how choppy it is, there's still some opportunities to catch some quick little 20, 30 pippers here, handles here and there. Right now it's compressing again. And we're going into lunch hour now. So I'd like to see these lows get taken. And if lunch hour pumps us back up one more time, and then slams it down and takes these out after lunch and continues going down lower, that would be ideally what I'd like to see. I'd like to see that wick hold price like we're expecting, and this premium array to hold it overall. If we take another run back up in here during lunch hour, leave these open, leave this open, and run back into this range one more time, you keep an eye on that level right there. Put this guy here. I'm almost done for the day as well, so find support, start running back up. We can start coming back up into this range here internally. Then I'm looking for my box. If we come up there, and again, if that's your terminus, look for holes in the rocks to find support on. There's the first hole, and it's full of mud. You're just getting bogged down in this. Trade below it, trade to it, going lower. Look for these lows now. There's the first one. Now, if you sweep that low, is it taking that one? Build some liquidity in here. If it holds this or takes these guys out, look for the run above here. Seek and destroy in this little consolidation. Take it out. Now you're looking for a displacement candle outside of this range. So if those are CAM model people, let's look at the CAM, this consolidation in here, and you want to see a big distinctive displacement candle to one side, and then use that CAM 1. And I'm already looking at this as a CAM, so I'll be looking at this like this, and I'll be going and I'll be moving from there to there. CAM 2 is right there on that fair value gap fill, strangely enough. Hey, so 50% of that range that's the CAM 2 based on this consolidation. That right there is a CAM 2. If you get through it, don't forget we got to get through it first, come back into a CAM 2. Otherwise, this would be CAM 1 from here to the bodies. CAM 2's there. And there is no 3 yet. So you want to see a displacement back to this, go higher, or back to the highs here, and then go higher, or to the lows, go lower. Ooh. Mm-mm. Mm-mm. I would hope for there a bit cleaner price action this afternoon. Yeah, I'm not doing much of a session. I don't think I will do a session this afternoon. I want to go out there and enjoy my life, enjoy my wife. Yeah, or you just burn the day, go back and enjoy your go out and enjoy your life. Come back to cleaner price action tomorrow. If you don't get it, you just stick your face in the charts all day long. You know, that's your if that's your modus operandi, then that's fine. Do I expect it? You know, you'd have to ask Derek. Whatever ICT said, I'm always looking for cleaner price action, and this is not clean price action. I'm trying to stay on the horse. Clearly, I would say we're below that here now, so you're bearish for these guys here. Rejection block. Are they just going to build this up here and then just kind of whip it against them? All these people that want to get short here now, run it back against them. This is just nice chunky consolidation. Back up inside the order block or the fair value gap, full fill of it. Now you want to see it really start to either accelerate down through here. There you go. There, they're all taken out. We've come back to our level. All right. So you want to see something stay open here. Do you have a plan to live stream this afternoon? No, I don't. I'm not going to live stream this afternoon. I'll pop into the markets and you'll see me. If I've got any comments, I usually throw them up. Or if I put a trade on, you'll see a trade this afternoon. It'll be on the Telegram channel. Consolidation. Come back to the consolidation right here. We have a little displacement candle here, and now you want to see it really book down now. I want to see it run for these lows. Watch the wick. Good. See you later, Abs. Take care, buddy. Have an awesome day. I'm out of here in 15 minutes. Thumbs up, D. Thanks. No worries. I got 9 thumbs up today. That's a good thing. Can we break 10 2 digits? Do we get more than 10 today? Ooh, we hit 14. You'd figure people would like this more. I'm giving you some pretty awesome staying in price action stuff here. Lows taken now. Previous day's low or high. Daily fair value gap, consequent encroachment. Look at that. Bing, right off of it. I just gave you a really nice trade right there. There's probably 30 handles there. Just off that one I just gave you right here. Remember we talked about the cam model? Came back, give you a nice little cam model entry right there. Ding. So even if you got a perfect cam model for that low right there, 73 to 55, there's 20 handles. Go 3 below, there's 20 handles right there. So now you've taken out those lows. Keep your eyeballs on that guy right there. For me to go bullish again, I want to get above this candle here. Look for this to go higher. You're inside it there. Go higher. If you haven't taken your trade off, you should. If it trades below there and back into this candle here again, that's not, I'd like to see that stay open. That little piece right there, stay open and start pushing higher now. That's the take profit, Pablo, yes. And now if we trade below it again, which we just did, now you're going to go short again into this small range here, that fair value gap. Does it hold price or do we close below it? We're already below here. We went above it and we traded below it. So that's lower inside that range. We've got this fair value gap. Do we continue on the downside? Remember, we wanted to just overall for the day, we wanted to come back now from that wick. Now I wanted to see it go lower for the rest of the day. So we're still getting support on the downside. If we get above here, look for a run back up into that range and these old highs here. But otherwise, I still like going down. Now that we've broken this low and we're finding some support in here, I don't know if I want to see it get back up that high again. Wait and see. Watch this guy here. See how we just dipped into this fair value gap below us here? Left it open. Order block. Mean threshold. Slam right on it. You don't want to see it get any lower than that now. It's got to keep going higher. I don't even want it revisiting it. I want that just get out of here now. If you want that to go higher. If not, you want to see it take this low and fill that fair value gap in. And then you get this new consolidation starting to happen. Wick, 50% of the wick. Nice hold. Took out that high. Lots of wicks going up there, finding resistance, trying to get back up there, right? Put your lines in the sand here and in here. You want to see it stay above here for bullishness and get really bullish if it's above here into that range, and then look for that one back up here again. Otherwise, I want to see that. Watch it get above here, and then you'll start gunning for equal highs. It's be a great way to shake off all the dudes that are going short before lunch, run back against them, clean them out, and then take it lower. On a 1 minute chart, there's nothing on a 1 minute. We've taken that low out there. You want to see it get above here on a 1 minute chart. Take out those candles and then start getting back into this range again. So back on that 15-second chart, I bet you that order block's been hit. See how we've traded above it here. Come back, found support at it. Keep pushing higher now. That's the guy we wanted to see it break there. It did on the close. Came back, found support, and we're going higher. Looking for these equal highs above us here. Small fair value gap here. That's the premium level. And it just hit it. So they've got to get up and through this. That was just perfect hit of that. You want to see it get through that. If not, then we're coming back into this range again here. It's right there. Let me put it on that marker there. And this guy right here. See how he hit it? That's the premium discount raise. You have to keep putting them on your chart. And you'll see them over and over again. This is something I've noticed. SIBI, BISI. Look for discount array and a premium array inside a range, and it tends to do this more often than not. And this is just my own observation. Michael hasn't taught this yet. I think he's going to teach it. I can't believe I've just discovered something like a contrary array on the opposing side. So a SIBI on this side and a BISI on that side. SIBI discount, BISI premium. And you've seen me put these boxes up so many times. That's what I'm doing. See how we went from an opportunity to get long to premium, then slam all the way back down into discount, all in how many seconds? Like 1.5 minutes. All inside that little area. So if you know what you're trading for, and those are your exits, it just took out these little old highs here too, and then quickly reversed on you. Trades below this candle, trades back up into that candle, continues down into the discount array. We have a reversal. Or a fair value gap, not a reversal, unless you look at this low here. And you're back inside that range now. So if this is going to compress, you want to see it in between here and here. My first time here. Is your Telegram for free? It's all for free, my friend. It's all for free. We don't charge for anything here. I don't even get ad revenue because I don't have that many people. So yeah, it's all for free. You go into the link above. It's the Telegram channel. Pop in there, say hi, be polite, Don't be rude. Otherwise you're gone. Just be nice and kind. Help each other out. That's the whole purpose of the channel. I don't have any of those little side channels where people get to go off on tangents and talk about other stuff. It's pure ICT stuff. That's all we talk about. We don't talk about retail trading. If you put retail trading up there, we'll delete it because I'm not there to confuse people. We're just pure ICT related stuff. And you got tons of really good people in there that are willing to help you out and share what they've got. I'll share my charts. I'll sometimes share my journal entries and my notes. Like you'll see yesterday, I put a whole bunch of notes in there. The last few days I've been putting lots of notes in on my journal entries. So you can, you're more than have access to those. And it's, again, it's all free. Adi, very nice reversal of 15 cents. Thank you, Darren. Very nice entry. See how we went? And I want to keep pointing this out. I can't stress this enough to you guys. I've discovered something that's super cool. The SIBI to BISI discount to premium. And then look at the range you're in again. And you go from right here, premium, inside this range again, premium to discount. So we went, sorry, from premium to discount array again, all the way back inside it. Then we went up into the premium again, right here. Sorry, premium here. Let me start from scratch. Here's the range. We look for our entry. Here's our trade above. We use this one to go long, aiming for that array. You hit it. The new range is from here to here. Look at that range and you say, there's the premium in that range, and here is the discount still. We come all the way down to the discount. Then what do? We got a new range right here. So you want to go all the way up from premium right there. And then you want to come back to discount. And as we go through discount, we go back to the next one. And if we lose this one, we extend the range. So we traded below it and we got into this one, bigger range. We're outside this range now because we know we're going to extend here. Come back up inside this one and we're extending the range again. So we're looking for support off of here. We've already eaten all the way through this and the mean threshold. So I'd expect price to hold here and keep coming down and take this low out. If it doesn't, then it trades back up. We've literally recreated that whole range there all over again. You look for the support here to start running back up into that premium range again. So I'm looking for this low to get taken out now. That's just trying to stay in price action. And that's going from premium to discount inside ranges. It is constantly doing that. The algorithm looks at a range, I think is anyway, and it goes from these premium discounts constantly. And if you keep an eye on the range that you're in, I tell you, it's gold. You see me, that's all I do every day. That's all I look for. That's my setup. And whether or not you're going to participate in it at a premium and sell it at a discount, you don't want to be saying, well, okay, well, if it trades through that, I'm looking for this low here. I'm going to get in at a discount and try and get a better discount. Wait for a premium. If it trades back through, which it's doing right now, look at that right there. See how it's traded through it and come back, find support at it. So now we're extending this. We're just building liquidity down here. We're back inside this range. So you search this range looking for a premium array, and there isn't one other than order blocks. So you got to look for order blocks to say, am I going to key off that old low right there? I'm inside this fair value gap here for a swing. So you mark this one out, and then there's no, and you got this little swing right here, but it's not it didn't take out an old low. It did take out all these lows, This one, I usually want to see it created on this side. Oh, wait. I just see it right here. I'm going to stretch it out a bit more and you'll see it. Do you see it right there? So watch this. I want to see this stay open now and start running back up inside this range. And there's a little imbalance up here. It's the highest one. So I'm looking up here. I'll just put a line on there. Pull your fib tool. Not that you're in on this trade because it's super sloppy in here. But look for this objective here. And that fill right there. It's already filled it once going down. I'm just thinking this now becomes the area of, do I find support at that to extend this range through this wick and back up into that higher array there? So there's the top one. See how we hit it? And we're getting a reaction. I love seeing those little reactions. And then if it blasts right through, then we look for the next one above that. We're extending the range. So look for it to run back into this area here. And then extend the range to the next one, which is right here. So we're through that one. Now look for this guy up here. Get that out of your way now. Chasing it with a bar. That high's been taken. See that one right there? We're through here, so now you'd expect to see it start running back up into this guy here. This might give me my lunchtime run on liquidity up here before going lower. We have a new consolidation here. Stay on price. There's your mean threshold. See how it hit last time off the mean threshold? Down. Takes out the highs. Fair value gap here. Keep pushing. Look for this one here. We've hit it once. We've got equal highs here, equal highs here. Relative equal lows below us. Small range. You got to be super sniper to be inside this stuff. Are my trades after 11 a.m.? Honestly, Craig, they're not. Mind you, I do. Yesterday, I caught a like $10,000 run yesterday. You'll see it in the notes. When you go to the Telegram, you'll see it in there. I posted it all in there. And I caught a lunchtime macro all the way up into that higher objective, which is what this is. Looks like this is going to do now. You got 12 o'clock. Did not take out this low. We've breaking these highs now. We have breaking market structure. I do like this box up here as my upside objective now. And again, there's a ton of PD arrays you got to play off of to confirm that. But that's where I'm looking. Doesn't mean to say it's going to go there, but that's where I'm looking inside the range now. And I want to see that as my overall goal. But I want to see all the levels continue. I want to see the rocks climbing. You mark them all out here and then look for them to support price for my inevitable terminus. See support. Came up, slammed down. You want to see support in here, not rolling over and coming back down. And there's no reversal in here. So I would expect just an order block here. Fair value gap. Continue to push higher. Small retracement back into here. Optimum trade entry reversal, maybe 50%. I've got nothing in here that tells me that we've got a big reversal happening off of this candle. We're just coming back into this range here. You want to see that get above there, otherwise we're still back inside here. You've got a fair value gap below you here. Draw your fib tool out and say, where does that match up with that range? That's good. Fair value gap, tippy tappy, away you go. I don't even want to see it come back into here. Get out of Dodge. Go higher. I like that. I'm going to try buying that long. And my stop loss is going to go. It has to go below this low. Not a good, it's still not a good entry. We're just getting above here. If we start cutting back into more than 50% of that, I'm on the wrong side. Don't forget my overall objective is down for the day. Now we've got a reverse right here. There's a body close below that. For bigger dig in here. We got equal lows, don't forget. It's taking out that close below here now. Larger range. That would have been the smarter move, trying to wait for the discount array before having to weather all this. I had an opportunity to get out of there at a better entry, so this is kind of like a journal thing you got to keep in mind here. We've should have waited into here for a long. Trades below it. It's like, oh, I'm on the wrong side of that. Stop loss is here. Trades up into an opportunity to get out before taking you out there. Reverse. Order block. Support. I want to see it get through here now. Start pushing higher. And that's it. 10 o'clock. I'm already over my limit, my time. So looking for higher prices here. And I'm looking for to see if that continues to support an upside objective during lunch. Not that you want to trade lunch, but anyway, that's where I'm going. My stop loss will be managed accordingly now. I want to make sure that I don't start getting back into a situation where we're just going to start rolling over here. So with that, I will leave you guys to manage whatever trades you're on, and I will see you guys tomorrow morning bright and early for Friday's TGIF Friday. Let's hope we can get TGIF Friday out of that. One more look at crude oil. Okay, let's have a look at crude oil. Oh, let me take all my notes off here too. I had a whole bunch of notes for crude oil as well. And again, you'll find those notes on the other page on my channel there. They're available to you, and you'll actually see them. I posted a bunch of notes on the community chat tab here as well on this chart. So anyway, this morning I was looking for this level here to provide a level of support, and it has. We can get up and through this. We found some support there perfectly at the consequent encroachment and looking for upside. Buy side liquidity was taken. That's done. Oh, we can move that up to the next one. Get rid of my notes here. Mean threshold of this candle. You want to see eat through that, find some support here, and get through that candle. So I'm looking at this candle here, and this candle's high. Look at that fair value gap there. Go down into a lower time frame and see if you can find continued support. So if we're looking for this level to provide support this morning, 3 hours ago, you go down into a 1 minute chart. 3 hours ago for the start of the day. That be in here. So that's the level we were looking for to find support on. Look for the reversal right here. Trades above it. You don't get a chance to get back in on it, so look for the next one. You don't get that one either. Trades above it. You don't get this one, so wait for this whole area here to get taken out. And then trade back into this level here, which is the breaker that takes these lows out, and that. So look for this breaker, mark it out in time, and it's the breaker, right? There. Somebody's calling me. So anyway, there's your breaker. You trade back up inside that breaker right there, right to the very bottom of it. And then you continue going higher. So that's the key level there. If you don't get in on these, wait for that to get your high to get taken and see if you find support at that. Anywhere inside that breaker is ideal. Well, the best place would be just right off the high and go higher. So far, this is the next high. You don't want to see, you're in between these two right now. You don't want to see it trade below there. Otherwise, we're running back into this one and taking out these lows. You want to see that find support off the top of this and start pushing into this one. Get on top of that one and start pushing higher. And then you look for the previous hour's high, 69.81. That whole mean threshold of that candle that we were looking at yesterday. If that one holds price there, which it did there, you wouldn't want to see it. Well, if it closes above that, then you're looking for this high and then run back up into this candle here. So you want to see this mean threshold hold price. So I don't want to see that high get taken out again now. They just wake up and then continue coming back down. But right now, you're go to a 1 minute chart and you're in between two arrays. So I wouldn't touch it. I'd leave it alone. That's my advice to you, Craig. I wouldn't touch it. Right now, it's a short, small bullish run inside here. And if you could have caught that right off that, when it popped up in here and gave you this one to go long, that would be the run up. As soon as it broke that high, be right slapped into break even. Put yourself there, and then the upper portion there is not even worth being in this trade for, as far as I'm concerned. It's not clean enough. Back on our side of the fence, relative equal highs are taken. I don't even want that. I'm just going to go to, I don't even want to see it come back down in here now. Get out of there, or I'm just out of the trade. I'm out of the trade. It's too sloppy for me. Way too sloppy. After downside work for lunch period, still below the equilibrium of the morning sell off. I am a bull that buys dips under $70 at key levels. Okay. I don't know what your logic is for that, but whatever, if it works for you, Craig, then I'm 100% in favor of it. If you've got a model that works for you, don't let me or anybody else tell you anything different. Hopefully now you can start to say, is there a spot under $70 where I can key off of and get some really good leverage on that looks logical, and I don't risk a lot of drawdown on it? And where does it fail for me? That I could take that out at $71, go back in and look for another $70 trade. So if $70 is your magic number, you've got some principles now that you can use to hunt for those levels. Yes, ICT levels. Anyway, I'm out of here. It's already 20 minutes past my time. As you can see, it's chopped. Welcome to lunch hour. Still, I'll have that as my upside objective. You got relative equal highs here and here and here, and a nice little chunk of change of liquidity still sitting up in here. So the fair value gap on the daily, we're still working the upper portion of that. So if we work this one more time back up into here, and then a big slam down after lunch, I want to see it really start to get some smoothness and start driving down. So that's the upside objective for me for now. See you tomorrow. Have a great pro shop day today, Derek. Thank you very much for the rest of you for tuning in, and I'll see you tomorrow morning. Have a good one.